Yeah, brilliant. Hi, FX Boyke. Yeah, brilliant. Thank you, Asador. Brilliant. Thank you, administrator. Okay, brilliant. Hi, guys. Thanks once again for taking the time out to be on today's webinar. I can see a few regular faces, which is good, and a few new faces. So, welcome. Um, as uh, as the regular guys know, I'm more of a trend trader, so I'm more of a long-term trader as opposed to day trading and scalping. So if you are new to today's webinar, you'll hopefully see something a little bit different to what is usually, which is the usual approach to trading by most private traders, which is sort of a day trading approach. Um, Now, as you guys probably are familiar with, is that over the summer period, what tends to happen is that the markets go quite quiet. And then once summer comes towards an end, which is August, trends and liquidity start to appear back in the market. So today's webinar is really all about and analyzing the markets and seeing which pairs are in trend and which pairs should be on your watch list post summer. Okay, and there have been some really, really interesting moves over the last week or so. So we'll go through that as always. We'll go through my chart setup. So how do I actually look for trends in the market? How do I break down the charts in front of you? We'll then go through some analysis of the market. So we'll create a watch list and we'll end up with some question and answers. So if you do have any questions, please type them in the box. And if they're relevant, I'll answer them then. If not, I'll wait till the end. So feel free to type in any questions that may arise at any moment. Okay, so let's get started. The currency pair you see in front of you is the Euro Aussie dollar. And that's for a very good reason, because the Euro Aussie dollar has been one of the better trending pairs in the Forex market. Now, Forex has been quite quiet this year. There haven't been a lot of trends. Usually there are a handful of trends every year. This year, Forex has been particularly quiet, which has been quite frustrating if you are a Forex trader, but then it's good to have other markets within your portfolio, such as stocks. And so US stocks have performed very well in this year, but the Forex market has been quite quiet. However, the Euro Aussie dollar has been one of the better trending pairs. And we'll go through that right now. So what you can see on the top of you, what you can see at the top chart is the weekly time frame. And at the bottom is the daily time frame. So straight away, you can see I'm looking at a much bigger picture. I even do go up to the monthly as well. But just to keep things simple, I go through the monthly, the weekly, and the daily. So weekly and daily, you can see in front of you. And on the left-hand side, you can see my watch list. It's quite an extensive watch list. So I start at the Aussie dollar all the way down to the South African rand, Japanese yen at the bottom. So it's quite an extensive watch list. Now, if you start with the weekly time frame, you can see that it's a naked chart. There's nothing on there. So I'm going to start loading on a few indicators. The first indicator that I'm going to load on is weekly 200 moving average. Now, the weekly 200 moving average acts as a major area of support and resistance. So as you can see, price is now heading down. And we've got the weekly 200 moving average about, I'd say 246, about 500-600 pips away before potential support level for price. Okay, so the weekly 200 moving average acts as an area of support and resistance. And beyond that, I also look at these support and resistance levels. Now, these support and resistance levels, let me just simplify it a little bit further. Right, so a challenge that many traders face, especially when they first come into trading, is knowing what are the areas of support and resistance to take into consideration. Now, if you take every level into consideration, you're going to find it quite hard pressed to actually find areas where price can trend, because every few pips there's some sort of level that price can potentially bounce to the opposite side. I eliminate that process by looking at a much bigger picture. So the pink lines that you can see in front of you are the highs and the lows of previous years. Okay, so this here is the highest point of 2013, and this is the lowest of 2013. So you can see that it's quite a significant distance between the high and the low, and that is potentially where price can continue to trend. So as price is reversed at this point, we could see price head down. If it breaks through the weekly 200 moving average, then we could see price potentially head back down to the low of 2013. Okay, and to simplify that even further, I only look at the previous 2 years. So here's the high of 2013, here's the low of 2013, here is the high of 2012, here is the low of 2012, 11, 10, so on and so forth. These two sets of pink lines are the only two that I'm looking at. Okay, so the weekly is what I look at for major areas of support and resistance. In addition, I also look at round numbers. So if you have a look, what we've had is a head and shoulders formation, which was confirmed when the neckline was broken right here with this red bear bar. So we had a head and shoulders formation, but we also had a tram tracks formation just below the figure 1.60. So this was acting as an area of resistance. Now, it's not exact. Now, trading is not an exact science. It's not always going to happen 100%, but we've got some kind of resistance zone where price failed and started heading back down. Now, when price starts heading back down, I then look at round numbers for target level. So my first target level would be 1.5. When price breaks 1.5, it's targeted 1.4. Now I'm waiting for price to target 1.3. However, we have got the weekly 200 moving average for price to contend with first. So if price could come to the weekly 200 moving average and bounce to the upside. However, if it breaks that, then I would like to see it target 1.3 and then the pink line and the 1.2, which are pretty close. So there's a support zone cluster around this level. So the weekly 200 moving average is giving me a much, much bigger picture of price action. And I'm looking for much larger trends rather than trying to be in and out of the market on a regular basis. I'm looking to get in at some point and hold that position for as long as possible. Okay, guys, is that okay? Can I just get a yes so that you get a good understanding of that? Yeah, brilliant. Thank you. Excellent. Brilliant. Thank you, guys. Okay, so now what I'm going to do is move down to the daily time frame. Now, the daily time frame, again, as you can see in front of you, thank you, FX Boyke, is a naked chart again. And I'm going to go ahead and load up the other indicators that I look at on the daily time frame. Right, the first indicator that I'm going to load up is the daily 200 moving average. Now, daily 200 moving average is also an area of support and resistance, similar to the weekly 200 moving average. But the daily 200 moving average also acts as an indicator that gives me a bias in price action. So what I mean by that is when price is above the daily 200 moving average, this is a bull market, and this is where I'm looking to buy. And if price is below the daily 200 moving average, this is where I'm looking to sell. It's the simple moving average. Again, not much difference between the exponential and the simple. I just tend to stick to simple moving averages. Okay. If I just compress price data, you can see that when I last started buying on this currency, this was going back to last year. And you can see that we had nice bull trends. Here's the first leg where we traded. Then we went through an area of consolidation. Then we had a second leg up. So there were two legs in which we traded. And you can see that is because price was above the daily 200 moving average. Now, here is where price started coming back down. But this is not where I started selling because we are above the daily 200 moving average. It's only when price broke through the daily 200 moving average, this is where I started selling. Now, one thing you should notice about this is that there is a certain level of patience that's required when being a trend trader. This is not a quick style of trading where you're looking to get in and out as quickly as possible. We're waiting for the best possible setup. We're waiting for the probabilities to be in our favor. Now, remember that while this is setting up, it doesn't mean that I'm not trading. I do have other currencies, as you saw on my watch list, and I do have other stocks that I have on my watch list. So while this is maturing, I'm trading other pairs. So I'm moving my risk from currency to currency and stock to stock. As soon as my software and my analysis told me that we're below the daily 200 moving average, this is when I started looking to sell. Now, another indicator that I'll use, I'm not going to keep it on, but just to give you guys an idea, is using a filter such as the XTL indicator. And you can see that the XTL indicator, as it starts heading down below the daily 200 moving average, starts turning red. So when you're below the daily 200 moving average and you're getting red XTL bars, What I'm getting now is a gathering of events. I'm getting things coming together that suggest that I have more chance of making a profit than a loss. And that's what we're playing on. In trading, nothing is guaranteed. That's why we always want to keep our risks small. However, once we're in a winning trade, we want to stay in that trade for as long as possible. Okay, I'm going to base analysis purely on price action. So I'm not going to keep the XTL on here. I want you guys to get really familiar with understanding price action as a trend trader, purely based on looking at price. Indicators are useful, but remember, indicators are mathematical formulas that are based on price. So price comes first. So you can see that when price broke through the daily 200 moving average, this was our first opportunity to enter. Now, after every break, we tend to see a pullback and some kind of retest. Now, it broke above the daily 200 moving average because it came back to retest the strong half round number of 1.50. So it came back, it broke through, it pulled back, and then this is where we've been trading the Euro Aussie dollar since May of this year. Aggressive traders would have got in around April. The more conservative traders would have got in around May. Aggressive traders tend to get in on the first breakout. Conservative traders tend to get in on the second breakout. So there's no right or wrong answer. It's just a style of trading should be dependent on the kind of character that you have. You can see that when we did get that initial breakout, now again, notice that price never shoots in your favor. Another mistake that traders make is that as soon as they get triggered into a trade, that they want to rush into profit. You know, a trend is a function of time. If you eliminate time, you eliminate the trend. If you eliminate the trend, then you eliminate easy profit. So you want to give the trend time to develop. Now, very rarely does a trend shoot in your favor. More often than not, what you expect is some kind of pullback and for you to go into your risk before price comes in your favor. Now, when I entered this, my entry was around this level here. My stop was above 1.5. So you can see that I gave price plenty of space to move. Potentially could have even come back to retest for 1.5 and had a double top formation and then a continuation. So I gave price plenty of space to move before it moved in my favor. And you can see that price broke out around 1.46, 1.47, around this area, and it's now reached a low of almost 1.40. So it's handed out a good amount of profit. Now, remember, as a trend trader, I don't stick to my original position. Every time price broke out, it allowed me the opportunity to enter a new position. So I've been scaling in and I've been compounding. So I've had several positions running along this trend. Now, if we look at this area here, you can see that price really has just been going sideways. We had a bit of a trend here in July, but then we had the profits handed out, just taken back during August. So in reality, we haven't really had much movement, just a sideways movement. Now, this is the summer period. You can see that as soon as we were coming towards the end of summer, we started seeing momentum back in the market. So we had this nice leg, this nice run down here from around 1.45 close to 1.40. A very good profit added to multiple positions. So if this moves, what have we moved? We moved 1, 2, 3. So we moved around 300-400 pips in this area. So if I've got 3 positions running or 4 positions running, I've got 400 pips added to each of those positions. So what I'm doing now is I'm compounding on all my positions. So this is the power of trend trading. And all I've done is I've let my positions run. I haven't done a lot of work for this. I've just understood that the trend is your friend, and I've let these positions run. Now, after every big move, we tend to see a bounce. Okay, and we've had this bounce here. So we had an indecision candle on Monday. Tuesday, we had a move to the upside. Now, remember, the trend is your friend. As of today, we've had that correction. So whatever ground was taken away from my open position has been recovered today. So we potentially got some kind of tram track formation. Now, what I'm looking for is price to break this pivot low, break through 1.40, and that's when I'll compound further and add another position. If I compress price data, what I would like to see now is price head towards 1.3. So if it breaks 1.4, I want it to head towards 1.3. However, if we look at the weekly time frame, we've got the weekly 200 moving average at around 1.35 before price can head towards 1.3. So we've got about 500 pips further, and then another 500 pips if price breaks through here. And you can see that when price is in a trend, price can quite easily break through the weekly 200 moving average. So potentially this won't offer much support and price should break straight through. But never predict, let price dictate. Okay, let me just have a look at chat. Is that clear, guys? Making sense? If you could just give me a quick heads up, let me know it's all making sense. Brilliant, thank you. Brilliant, thank you guys. Okay, excellent. Right, so that's brilliant. Thank you, Audemars. That is the Euro Aussie dollar. So the Euro Aussie dollar, guys, should be on your watch list. Okay, so if you're looking to take any short trades, the Euro Aussie dollar should be on your watch list. Yes, I've just got a question coming through. Is this recorded? Yes, it is. Mrs. Is that me? No, MRCC. Yeah, it is recorded. Okay, so the Euro Aussie dollar should be on your watch list. Wait for a break of 1.40 though first, because 1.4 is acting as a support level. Price should break through as the trend is strong. Wait until it breaks and closes below 1.40 and then jump into the market. So a little bit of patience. Also, guys, remember NFP is out on Friday. Now, I don't know how you guys trade NFP, whether you get involved in NFP. I stay out of the market. I'm not interested. I'm not interested in getting in and out of the market on a few pips. It's not my style of trading. My computer has stayed closed from today. So Wednesday, Thursday, Friday, I don't do any trading. I let NFP figures come out, and then Monday, I'm back to normal. Okay, so I'm not going to, even if price breaks this pivot low today or tomorrow, I'm not going to take any positions until Monday. Okay, now let's move on. Let's have a look at the pound. Okay, now the pound has been in a big reversal really since the summer period. So let's have a look at this. Let's start at the weekly time frame. Now, if we take price action from this low point, what we had was a double bottom in close proximity to 1.50. Okay, so again, a round number acting as some sort of support level. Again, not an exact science, more of a support zone. And we had a bounce to the upside. Now, look at this. This is a perfect example of the trend. This happened in July of 2013 all the way through to July of this year. So you're looking at one whole year of trend. That is the direction that you want to be going in. You can see that any reversal trade may have given a profit, but they're short-lived compared to the trend in the opposite direction. Now, instead of trying to predict tops and bottom, wait for price to correct itself and open another position on a breakout. So you can imagine if you traded this whole trend and you had multiple positions going across these breakouts, that is how easy and serious money is made. Okay, so what we then had was a break of 1.70. Now, when price broke 1.70 and actually the high of 1.7043, but actually compressed price action, you can see that price has actually been in this consolidation period because of this big trend that price had been in during 2008. After every big move, we had a period of consolidation. So I needed a clean breakout of this consolidation. So when price broke above 1.7043, price had also broken above 1.7. So this is when I entered a position long. Now, I went in on a reduced risk of only 1%, and it was actually a losing trade, and price reversed and stopped me out. I'm not going to always get it correct. I'm playing on probabilities. However, look at the upside. If I had got it correct, price would have targeted 1.8, 1.9, 2, because potential future price action lies in the past. And we've seen these highs before. There's potential for these levels to be reached again. However, this was short-lived. Now, I was watching the news the other day, and they reckon that this decline in the pound is based on what's going on with Scotland, seeking independence, etc. Okay, that's fine. But the point is that technical analysis tells us everything that we need to know. We don't need to get involved in that too much, because that kind of news has already been factored into price action. So as private traders, we want to focus purely on technical analysis. So if we look at the technicals are telling us that we're quite clearly in some kind of downtrend. We've broken through the high of last year. So the high of last year is acting as a resistance level now. We do, however, have this support level right here, which price is now contending with. If price breaks and closes below this support level, then we should see further weakness, ideally towards the weekly 200 moving average and the 1.6 figure, and then see price break through that and head towards these low figures here. If we go to the daily time frame, now remember, the daily time frame is where I use price to give me a bias in price action. So you can see that when price broke above 1.7, we were also above the daily 200 moving average. So strong indication that price was going to continue. But it was short-lived, and we've since had this reversal. Now price is trading below the daily 200 moving average. I'm now looking for shorting opportunities. So the pound dollar should be on your watch list. Not yet. Wait until NFP has passed on on Friday, and then go in on Monday. Now look at what's happened. After every break, we tend to see a retest. So we've had that retest. And then yesterday, we had this big bear run down. And that's just a continuation of this bear trend. Imagine if you're trying to pick the tops. That's totally short-lived compared to the actual directional trend going down. Now that we've got a break and a close of this pivot low, this is suggesting a potential continuation of the downtrend. However, I'm still waiting for a break and a close of this pivot before I start looking for shorting opportunities. So the pound dollar should be on your watch list, but patient for now. Let price dictate, because potentially what we could have is a double bottom or some kind of support level here, and price bounce to the upside. So when we get a break and a close below, then we should start looking for shorting opportunities. Now, one thing you should notice is that quite often people go long at bottoms and go short at tops. That's not what I do. I wait for lows to be broken and I continue selling. I wait for highs to be broken and I continue buying. I'm going in the direction of the trend. Okay, pound dollar should be on your watch list. The euro is also setting up quite nicely. The euro dollar. I know FX Street sent out a tweet earlier today about the euro. So from a technical perspective, let's see what's happening. So what we had was price reach 1.40, again, round number. So you guys should be engaging in how round numbers do have significance. So we had a support level around a resistance level around 1.40. This is the high of last year. Price found some kind of resistance around this zone here, and we've seen weakness since. Now, this actually is a good example of how the euro is not something that I have traded in quite a long time. The last time I had traded the euro was back in 2012 in this trend up here. Since then, trends have been short-lived and quite messy, and the euro is actually the most heavily traded currency. Yet it's not something that I have been particularly interested in almost 2 years, because there have been no trends. That's why having a good watch list is crucial to making money in trading. You don't want to get obsessed with the euro dollar. Now, what we had was a break of the weekly 200 moving average, indecision, and then a continuation. Okay, I'll come back to that question. And since then, we've had a continuation of this bear trend. Now, what do we have in front of you? Well, we have the figure 1.30. That's immediate support. And you can see that, in the past, this has found some kind of support around this level. So if you do look to take any shorting opportunity, you want to make sure that you hit your target before 1.3. After 1.3, you then have this pink line low of last year. So if you're waiting for 1.3 to be broken, then you want to hit your target before this pink line. When price breaks through this pink line, then we should see plain sailing towards 1.2. So there are support levels ahead. So however you trade this, you want to be a little bit more cautious. Okay, and the best way to do that is to keep your risk small, work on a 1-to-1 ratio, and make sure that the distance between your entry and your stop is the same as the distance between your entry and your target can be met before 1.30. So you can eliminate your risk. Remember, the most important thing in trading, let me rephrase that. The first thing that you want to achieve in trading, excuse me, is to hit your target. You want to eliminate risk. Making money is secondary. When you're in a winning trade, you can see, for example, the euro Aussie dollar, how money will be handed out when you're in a winning position. However, the first thing that you want to achieve is to eliminate your risk. So make sure your targets are well placed before or after round numbers, depending on which direction you're going in. Okay. Now, let me just go through some of the questions that are coming through. You enter on the break of a high or break of the candle body. Yeah, okay, that's a good question. I enter on the break of the high, so I take the wick into consideration. So if I was to enter on a short, I would wait for this wick, the candle wick itself, to be broken. So here, how do you decide whether to buy or sell a pair? Is it whether? Yes, correct, exactly. I use the daily 200 moving average to dictate whether I want to buy or sell. So you can see here the euro dollar started heading down here. So the trend, this downtrend, actually started around 1.40 above the daily 200 moving average. But I'm not interested in this. I'm interested in this here because I'm below the daily 200 moving average. So what this is doing is setting the probabilities in my favor. Okay, in hindsight, it looks fine, but you can see here how many times it came to the daily 200 moving average and failed, came to the daily 200 moving average, failed. In this case, it hasn't failed. So this is where I'm starting to look for short-term opportunities. Do you think there'll be a pullback in the euro dollar? I don't know. That is the answer. I don't know what the markets are going to do, and that's not something that I will anticipate happening. I keep on going in the direction of the trend until I'm wrong. So, yeah, 1.3 could become a support level and we could see price bounce to the upside and we could see a reversal in trend. Of course, that's a possibility. But then again, that might not. And if I am wrong, my risk is never more than 2%. But you can see in the meantime, if I started going short out of all the breakouts, how many times I've been correct before I get it wrong. So that is what you want to be doing. You want to be going in the direction of the trend until price tells you otherwise. Yeah, okay. So someone's just asked me, what are the pink lines? The pink lines are basically the highs and the lows of previous years. So this is the highest price of 2013. This is the lowest price of 2013. This is the highest price of 2012, the lowest price of 2012, so on and so forth. So these are my major areas of support and resistance. And there's one more question. Yeah, it's a very good question. FX Boyke asked one-to-one targets, but you hold long-term. Okay, it's a good question. Remember, yes, I work on a one-to-one target because I want an area where I can eliminate my risk, but I do not close my position. So if my target is 300 pips, my stop is also 300 pips. Once I've hit target, I move my stop to my entry, but I don't close my position. All I've done is eliminated my risk. Now that I'm in a winning trend, I want that trend to continue. And when it pulls back, I then compound. When it keeps on going, it pulls back again, I then compound again. So I keep on scaling in on either a breakout or a pullback, depending on market structure. FX Boyke, answer your question. Okay, thank you. Okay, let's have a look at what else is on the watch list. Right, Euro Canadian dollar. The Euro crosses have been weakening quite nicely. Yeah, sure, I can do that. Okay, so what we've had here is a bull trend, a very, very good example of a bull trend and something that we had traded and taken very good profit. This bull trend started in what we're looking at, August 2012, all the way through to March 2014. That is a beautiful example of a trend, and that is an example of the direction that you want to be going in. Now, a trend doesn't last forever. At some point, it will reverse. What we had was indecision, and you can see that from this spinning top, and price has now headed back down. It's broken through 1.50, and it's broken through the pink line high of last year. So on the weekly time frame, it's suggesting weakness. What we have is support at 1.40. And we've also got the weekly 200 moving average acting as a support level. So we have support levels ahead, so we want to be a little bit careful with where we enter. If we go to the daily time frame, you can see that this is where the trend started heading down. But this wasn't an area I was interested in trading until price broke through the daily 200 moving average. As soon as price broke through, We've had some kind of retest, and it's now handing out profit. So I do have a couple of positions running along this trend. When price breaks through this pivot low, I'm going to compound further and scale into my open position. Target will be before 1.40. If price breaks 1.40, then we've got the weekly 200 moving average. If price breaks through that, then we've got 1.3 and the pink line low. So we do have support levels ahead. Okay, we just need to be aware of where our stops, where our targets are going to be placed. The question is, when do I take profit? When do you take profit? Yeah, my profits are locked in, so I'm using a trailing stop loss. So as I'm compounding, I'm collapsing my stops. Okay, so I do have a trailing stop loss. So what I want to do is be locking in small amounts of profit, but still allowing the trend to develop. So I do have several ways of doing that. I can use the regression trend channel, or I can use the just my compounding methods, the way I manage my stops. Now, the regression trend channel, if I just show you, the regression trend channel, I don't know if you've got it on the software that you use, but the regression trend channel is a tool that can be used to look at market structure. And what it tells you is how much of the trend is staying within the channel. So you can see here, it's telling me that 92% of the trend, 92% of price action is staying within this channel. So what this means is that this blue line now is my trailing stop loss. In a bull trend, I would do it the other way, but the red line would be my trailing stop loss. Okay, the 100 and the 50. Yeah, the 100 and the 50 can be used for short-term trend direction. The 200 moving average is more for a bias in price action. Okay, so I do use the 50 moving average. I use the 50 moving average to give me what the shorter term trend is doing. I use the 200 moving average to give me an idea of what the longer term trend is doing. So yeah, I do use the 50 moving average. So do you consider your short positions on Euro Aussie dollar? Okay, yes, a very good question. Yes. Now, whenever I take, for example, the Euro Aussie dollar, people will ask me, do I look at what the Euro dollar is doing and what the Aussie dollar is doing? And the answer is very rarely. I tend to look at each currency on individual merit. I don't want to overcomplicate things. Unless the euro is at some major support or resistance level, then I may hold off on the other currency pairs. But in general, I take each currency on individual merit. And yeah, always be aware of your risk. You don't want to overexpose yourself. Darren's asked me, do I overexpose myself? No, you don't want to overexpose yourself. Risk management is key. So, you know, if I've got 2, 4, 6% of my account, my account exposed on euro crosses, I'm not going to start opening any more positions until I start hitting target. So you don't want to overexpose yourself on any currency pairs. However, what you'll find is that pairs trend in groups. So all the euro crosses may be trending. In which case, you don't want to just stick to the Euro Aussie dollar. At the moment, I'm trading the Euro Aussie dollar, the Euro CAD, and I've got position on the Euro pound. So I'm trading all three of those. So, but the way I'm doing it is very clever with my risk. So I'm not overexposing myself. Is that the same as linear regression? Yeah, I guess it is. The only difference with the regression trend channel is that it gives you the Pearson's R value. I don't know if that comes with the linear regression channel, but the Pearson's R value gives you this reading, which is very useful because it's telling you how good the structure of the trend is. And you can see that, you know, it does work. Okay, let's go to the Euro pound because someone's requested we look through the Euro pound. Okay, Euro pound. If you look at this, again, nice clean trend with a neat pullback. So a nice linear structure to price action. Price did a double top or a 1, 2, 3 top around the pink line high of 2013. And you can see since then that price has been in this downtrend. Has broken through the weekly 200 moving average. It's now trading below the low of 2013. So after every break, we tend to see a pullback, and that pullback to 0.80. So again, a round number. acting as an area of support and resistance. And since then, price has headed down. Okay, this week we've had a move to the upside. And, that's what price does. What we potentially could have is a double bottom and a bounce to the upside. Or this could just be profit takers, people who are trying to push the market from some kind of low and push the market up. The reality is that these kind of moves are more often than not short-lived. So what we could see is correction over the next few days, price break through this pivot low, and then a continuation to this pink line. If price breaks through this pink line, then we should see weakness towards 0.7 and ideally to lows of 0.6. So if price does break through here, then we've got plenty of space for the trend to develop. And I'm looking for price to continue in the direction of the trend. If we go to the daily time frame, we can see that we are trading below the daily 200 moving average, and this is going back to September of last year. So the odds are very much with the bears on the daily time frame. Now, if you look, what we had was really an area of sideways movement. Again, this is the summer period. So we had a trend. Now that's a trend. Nice clean move down after price bounced off the daily 200 moving average, acting as an area of resistance, a 1, 2, 3 top, and we've had this nice trend down. You can see that June, July, August, price just went sideways. Then we had trend kick in, and we've had a bounce to the upside where prices come back to 0.8. What we could potentially see is an indecision candle, so a spinning top of sorts by the close of play today, and potentially a move back to the downside. If we get a breakthrough here, then that'll be a continuation of the downtrend. Okay, let's have a look at I think it was the Aussie dollar, I believe. Someone asked if we could have a look at the Aussie dollar. So let's see what the Aussie dollar is doing. Okay, so the Aussie dollar is below the weekly 200 moving average. It found some kind of support at the pink line low of last year. So we've had a bounce to the upside. It's broken through 0.90, but you can see that literally since the start of the year, this has done nothing. It's just gone sideways. Now, sure, on a smaller time frame, there are trends within that, but I'm not interested in those smaller time frame trends. I'm looking at the bigger trend. The longer I stay in the trend, the more profit I make. In addition, all of the intraday noise is of no concern to me because I'm looking at the daily and the weekly. What happens, during the day is of absolutely no concern. So trading literally takes me about 30 minutes a day max. What I'm now looking for is price to dictate a trend direction. So if we get a break above here, then we should see strength towards the weekly 200 moving average and the figure 1.0. If we see a break below here, then we should see further weakness. This is not a currency pair that I'm particularly interested in because the euros are looking good. The pound is setting up. The Aussie dollar, Japanese yen, which we'll look at in a second, is potentially setting up. So they're much better pairs to be watching. The Aussie dollar is not looking interesting at all. If we go to the daily time frame, we can see that it's just going sideways above the daily 200 moving average. What I'm looking for is price to, for this bias to hold. And if we get a break above this, then we've got strength to the upside. So if you do like to trade the Aussie dollar, then wait for a break of this high point. Just make sure that your targets are met before the pink line wait for the pink line and wait for targets to be met before the weekly 200 moving average. In fact, we've also got a resistance level here. So there's a lot of resistance ahead. It's going to be a bumpy ride for the Aussie dollar. So it's not something I'm particularly interested in. If it breaks above the weekly 200 moving average, then I'll start looking to buy because then we're also above the figure 1. So a little bit of price needs to mature on here. If we look at the Aussie dollar, Japanese yen in comparison. Okay, Aussie dollar, Japanese yen, what we've got is price above the weekly 200 moving average. And you can see that price is heading up. It's been a bit messy. Again, this is the summer period, so just sideways movement. But now we've got momentum coming into the market. So the market makers are back in play. They're moving the market. And we've had this run up. What we've got is the figure 100 acting as an area of resistance. So if price breaks through here, then we should see strength to this pink line high. So if you do look to enter anywhere around here, make sure you hit target before 100. If price breaks above 100, then you want to see strength toward the pink line high. Okay, so you've got about 500, 600 pips. If price breaks above here, happy days, we should see a nice clean trend develop. If we go to the daily time frame, we can see that here is that sideways movement, and that's pretty much been happening throughout the whole year, not just over summer. But you can see we then had an indecision candle, price bounced off the daily 200 moving average, and prices bounced to the upside, and it's moved quite quickly. Okay, so and move of today, well, that's probably one of the bigger moves of today and in the direction of the trend. So the Aussie dollar Japanese yen should be one on your watch list. Just make sure you're aware of the 100 figure. Okay, and we'll look at one more, which is the Aussie dollar New Zealand dollar, and then I'll look at the questions that have been asked. Okay, Aussie dollar New Zealand dollar. What we've had was some kind of support level, and then also the pink line low of 2013. So we've had some kind of support zone, and prices bounced to the upside. It's broken above and broken out of this support, this resistance level, which is now support. So it's broken out of consolidation, and we do have a support resistance level here, which is now support. So you can see with the move of today, price has broken the resistance, which is now support. If this closes and holds, this is a trading opportunity. If we go to the daily time frame, we can see that price traded above the daily 200 moving, broke through the daily 200 moving average, and is now heading up. And again, a nice strong move. So you can see that price is heading in the direction of the trend. Say for argument's sake, you entered a position here. All you've done is let that position run. Obviously you have to learn to hold positions during these drawdown periods, these pullbacks, but price never moves in a straight line. Price moves, breathes, moves, breathes. That's where understanding of price action is absolutely key. It's fundamental to trading. But if you did get in here, you'd see how price would have moved in your favor and handed out very good profit. And this is actually a currency pair that we were shorting last year. And you can see how price handed out very good profit between March and August of last year. Nice bear trend. Then we had a period of correction, and then we had another leg down. So we profited very nicely from the Aussie dollar, New Zealand dollar in two periods. After every big move, price goes through a period of correction, and now we've got the odds in the favor of the bulls. So now we want to start buying into this. So by using the daily 200 moving average, the round numbers, the pink lines, and the weekly 200 moving average, purely based on price action, I'm establishing high probability setups in the direction of the bull trend or the bear trend, and then simply trading in that direction until price dictates otherwise. So the Aussie dollar, New Zealand dollar should definitely be on your watch list. Okay, that's the last chart. Let me just catch up on the questions. Okay, you're using eSignal 10. Yeah, that's fine. I'm using eSignal 12. That's because my tools and pages, the tools and pages that we have, that we've created, they all work in eSignal 12. And eSignal 12 is far smoother than eSignal 10. eSignal 10 is very clunky. It's old. I believe it's quite a few years old. So eSignal 12 is far smoother. It's got a lot more functionality. You've got tools like the regression trend channel. I don't know if that is in eSignal 10. So eSignal 12 has far more advantages to it. So 12. So you want to really look to upgrade. When you say spinning top, is that the same as head and shoulders? Yeah. Look, spinning top is a candlestick. Head and shoulders is a chart formation pattern. Now, let me give you an example of that. What did I look at? I think it was the Euro Aussie dollar. Okay, so here's a head and shoulders formation. Now, a head and shoulders formation at a potential resistance level is a sign that price could reverse. However, I'm not going to enter until the neckline's broken. So I'm not actually interested in getting involved in the head and shoulders at any point. So that's where I'm staying out of the market. When price breaks out of this head and shoulders, this is where I start looking to enter the market, because the head and shoulders have been confirmed when price breaks and closes below. Okay, so this is a good example of where I traded, didn't trade, traded, didn't trade, and now trading again. Here we have a tram tracks formation. Now the tram tracks again is at a major area of resistance. So the tram tracks could be a spinning top, it could be a doji, it could be a hammer, it could be any one of those sort of indecision candlestick. What an indecision candlestick means is that the market doesn't know what to do. So instead of guessing, let price dictate. So if there was an indecision candlestick here and price broke above and 1.6, I would then start buying after 1.6. If there was an indecision candle here, I'd wait for the support of the neckline to be broken and then start trading here. So applying patience and letting price dictate when to go in long and when to go short is a fundamental part of trading. And knowing how to use candlesticks is really important. Don't get obsessed with candlesticks. If you actually look in this direction from here to here, there's quite a few reversal candlesticks. There's a couple there. There's another one there. There's another one there. There's another one there. The point is that the trend is just up. So you don't want to get too bogged down in reversal candlesticks or indecision candlesticks unless there are major areas of support and resistance. Okay. Okay, yeah, I mean, that's correct. Remember, as I said before, I'm looking at all currencies on an individual merit. So, the US dollar, Japanese yen is something that I'll be looking at. Yeah, Manoj, I only go back 2 years. So the pink lines that you see on the weekly time frame, I only go back 2 years. So 2013, 2012. Beyond that, they just get weak. They don't hold much strength. Okay, guys, I think that's it. I've gone 2 minutes over, 3 minutes over. Sorry, administrator. Let me just refer you, as always, to a few bits and pieces on the internet. My website, which is thetraderscosmos.com. Guys, please get in touch with me. Look, if you guys are serious and you really want to learn how to trade trends, then you need the right approach. You need the right software. Okay, you need the right understanding. Trading is like anything else. You need training. So if you are serious, please get in touch. Just get conversation going. All right. Please follow me on Twitter. I put lots and lots of stuff out on Twitter. I'm quite active on Twitter. Okay, especially the trades that I'm looking at, the currencies I'm in when I'm compounding. So a lot of stuff goes on to Twitter. If you guys are based in London, please keep an eye out on my Stock Market Success group. Okay, I do have a meeting scheduled, which I haven't put up. That's going to be up in the next couple of weeks. So it'd be good to meet you guys in person if you are based in the UK. Especially around London. And finally, I write for the FX Trader magazine. I've recently been asked to contribute to FX Trader magazine. So this was my first article, Trading Trends. So everything that we've covered today, this is all explained in this article. And then my next article, which is Shorting the Euro Dollar using Technical Analysis, again covering what we've done today. This will explain how to use technical analysis to short the Euro Dollar. So there's a couple of articles online now that you guys can read as well. Okay, brilliant. I'm going to leave it there. Thank you all. Brilliant. Yeah, okay, let me just send you guys the link for... Oh, excuse me. Here you go. Okay, that's the link for my article on FX Trader magazine. Okay, thanks for your time, guys. Thank you, administrator. Thank you, FX Street. Have a good evening, morning, afternoon, wherever you may be. And please get in touch and let's get a conversation going. Have a great day. Thank you.